Where's everyone? Oh, I'm going to. People, and trading. People are not serious about their trading if they can't attend lectures. Right, people. We're going to talk about market cycles. I think uh, before we start, I gave everyone when they first joined this group Larry Williams' PDF file, right, on his market outlook for 2024 and how he explains cycles. There is a data set in trading that most traders don't pay attention to because they don't think that it's relevant to their trading, but it's having a long-term outlook for the market. Now, market cycles are triggered by central banks and their actions and what they do. It's all about money coming to the market, liquidity, and things like that. So, if the central bank of the United States is going to cut rates, they go from a restrictive cycle to a a basically bullish cycle, if that makes sense. Oh, sorry, restrictive and easing cycle. Uh, as at the moment, as things stand, there is slightly favoritism towards a 25 basis points, but we take the 50 basis points for many reasons. I'll explain it to you guys. I want you guys to understand some facts about this place, this market here. The Fed's Fund Watch tool is a market that can actually be traded. Um, if you watch Peter Lynch's video from Fidelity, this market is exclusive, but I think you need $10,000 to trade it. If you get these right 6 times, you become a billionaire. I think now it's probably more. Back then it was $10,000, but I think now it's $50,000 to trade this market. But it cannot be priced in. So basically, you have to be on the crazy side. So you have to make a call that no one else sees, and you get it right, you get paid a lot of money. There's real open interest on this. 293,000. But anyway, back to what I was saying. Sorry. Yes, in the call it is. Anyway, I'll send you guys the Larry Williams PDF file. But I think many people didn't read it. It's disappointing, but everything I'm about to say is just basically his understanding and also to explain some things to you guys when it comes to trading. Some people they look at the market as uh, what you see this here, right? But nothing happens here unless it's already predetermined to happen in here, the commitment of traders report, right? But there's these guys don't make their moves unless these guys give them the light. I showed you guys how the Bank of Canada started cutting rates before everyone else, but they cut rates too early, if that makes sense. They just get into 2.5% inflation, whereas the Fed cut too late is cutting too late, if that makes sense. Now, I wanted to highlight what is known as the Beige Book and Jerome Powell's comments from um, the 31st of January, what he said. I'll read it for you. I spent most of my life in the private sector looking at companies, individual management teams, and then building out from that. Many people don't know that this Federal Reserve, unlike previous Federal Reserve, the good thing about Jerome Powell is that he asked all the members once a month to go out there and speak to people. He likes real world data, which is actually good. And it wasn't, I think it was who was before Powell? I said Greenspan or someone else. I forgot the last guy. Bernanke, yeah, no one liked Bernanke, but yeah, it basically Jerome Powell goes out on the field. He tells the Fed members go out there and speak to businesses and stuff like that. The 12 reserve banks have really the best network of anyone in all their district they're talking to. Not just the business community, but the educational, medical, all non-profit community. They have arms into all of that. But they come back, and what each reserve president does is during the outlook go around, they'll say in my district, and they'll talk about 100 conversations. They won't talk, they will give you input based on 100 conversations. And I personally find it helpful in understanding what's going on. Now, you could speak to anyone in the United States, the situation is bad. Businesses are barely hanging on, and it is not enough, in our opinion, based on what everyone else thinks. If you guys saw that Jerome Powell's press conference on when he spoke at Jackson Hole, the whole concept of taking it easy, all of that is gone out the window. What was surprising was Bill Dudley's comments also at the economic event that he attends every September, that he exclusively speaks. I told you guys that Jerome Powell has to convince the other members to go 50 basis points, and Bill Dudley's convinced already. So is our favorite Fed member, New York Williams. Williams is also convinced to go, and even the hawkish ones are saying that the rate cuts are necessary now. If the number two is convinced to go, the most important Fed is the one in New York as well. Williams, everyone loves in the market because he always gives a positive outlook, But if he says one thing negative, then the market would dump, Anyway, as far as trading is concerned, I want you to focus on this chart. When I did the S&B Capital on tape trading, they taught me something that I didn't know, that I never considered. Supply and demand in the chart itself. Not supply and demand levels or anything like that, but the way they explained candlesticks was like crazy, the way these people explained it. Every time the market, these three candles, or 1, 2, 3, 4, every time there's negative candles, they have to be matched by positive candles. This would be considered as a low resistance liquidity run until it's not, basically. As you can see, this is Dixie Dollar daily chart, but if I go to the weekly chart, as you can see, there is a lot of sellers in this market, so there's no demand for dollar and supply is less, if that makes sense. But the way they call it is aggressive supply, aggressive demand, until it becomes way too aggressive or something like that, if that makes sense. Now, as far as Dixie Dollar is concerned, there is, if we go to ICE Futures short format, and I take you guys to, where's the Dixie Dollar, US dollar index. Our friends, the commercials, have started their selling program. Our friends here have removed their short interest and they've removed their long. Now, this is what is important. At every major event in the market, whether it's FOMC, NFP, mostly FOMC, one group steps back or two groups step back. Our friends, sometimes the commercials leading up to the event, they will take an interest in the market. On the case of Dixie Dollar, they have more than everyone else, so they are predominantly, basically, they will take the interest in this market to go short. Open interest has been positive on the long side for a very long time on dollar, and yet whenever open interest increases and our friends, the commercials, are shorting, it means they're long covering. If it was the other way, that open interest is decreasing and these people are bullish, then they're short covering, basically, so they intend to reverse the market. The reversal process has already started. 50 basis points on Tuesday, 25 is already being priced in the market. 25, if they do 25 basis points, it's not going to be a market mover, and the market would take its attention to the Fed. This September we get the Fed dot plot going forward. What are their rate cuts, for how many rate cuts they're going to do? They're going to do a lot, and what is their medium rate, as it's known, if that makes sense. Now, everything I'm saying to you is not in terms of trading. It's not something to be able to. I'm not telling you to trade ahead of the news. I'm just saying whatever happens on the day, wait. But if we do get 50 basis points, now the only reason logically also is that the Fed, when they started raising rates, they went with 50 basis points from the. They didn't start 25 like everyone else. They went straight 50. I think they did 53 times in a row, and then they did 25, 25, and then they did 50 again. They hiked the most. This was the most aggressive hike in the history of all rate hikes and rate cuts. Now, here is a fun fact, yeah. The Fed has raised rates and cut rates 6 times in the history of the Federal Reserve. 5 of those times they raised rates by 50, and 5 of those times they cut rates by 50. So it just so happens that only one time that they raised 50 basis points, they started with 50 basis points, and when they were cutting, they cut with 25 basis points. On all occasions except for one occasion, I think it was 1950s, the United States was in a recession, so therefore they had to cut rates. Jerome Powell, he has inflation at 2.5%, and he has the soft landing situation, whereas the Bank of Canada is cutting rates too slow, so they ended up being in a recession. Canada is an example of what not to do. What happens when you start cutting too little? Now, what I said to you guys is 25 basis points is not a market reaction. Market will go sideways on the day. 50 basis points is a market reaction because, 50 basis points is the what is not being priced in. What is more is considered priced in. If this will be a surprise in the market, but I say to the Nasdaq traders, remember the issue of what I said. Real supply and real demand is seen in the candles, how the candles are moving, which candles are more dominant. If you look at the picture, you can just tell it's negative. But in the case of Nasdaq, I said to you guys, people forget in the cycle of central banks, what I was talking about is in December, Jerome Powell said there will be, he did the pivot. He said we will start looking at rate cuts in the future. And we saw those three rate cuts in the Federal Reserve forward guidance, the dot plot. We didn't see that before. There was no rate cuts in the forward guidance before in the previous meetings. But it was in October that Jerome Powell changed his mind when he started seeing very, very negative feedback from the districts where the Feds are, those 12 central banks where they're based, those Federal Reserve offices where they're based. And being a man that goes around talking to people and likes real world data, he said also we look at the totality of the data. They don't look at data like how we look at it. They have like first hand experience, and it's just for being a Federal Reserve member or of any city, because they're going to give you a hard time, right? Business is going to blame you for their problems. So a lot of the members started coming back to him and said to him, look, we're having a hard time over here, we need to do something, you know. Anyway, the point being is that because the market where we are now on Nasdaq, if I go to the weekly chart, since beginning of where was this? Sorry, since I think the best one is NQ1. Sorry, I'll go to NQ1 and I'll show it to you like this. So where is January? So we got this far. We got this far from here to there. 6 months, right? So 6 months is, yeah. We got to this far based on the expectations of rate cuts and inflation going lower. This is one cycle, okay? Now, market cycles is very simple how Larry Williams put it in his book. Stage 1 is expectations of things of the cycle to start to change. Stage 2 is expectation of that what is expected to happen to actually happen. Rate cuts begin. So, now, back in 2022, when we had when the market dropped, starting here, this was rate hikes. This was relentless rate hikes. This was a pause in rate hikes. This was another pause in rate hikes. If you look at the bigger picture, and if I show it to you like this, it happens in 4 stages. This was also inflation beginning. So inflation beginning, rate hikes, Ukraine war, energy spikes, rate hikes, cutting down on rate hikes, pause, holding rates, holding in restrictive stance, and then thinking about inflation coming lower, talking about and here we're here. This big move here was rate cuts are coming. The next stage in the market is stage 2, which is implementation of rate hikes, rate cuts itself. If you look at cycles in markets, it takes 1.5 years for one cycle to complete. Normally, usually negative cycles last for 1.5 years, positive cycles last for 3 years. But this cycle started in 2023, the last 6 months of 2023, which is here. It started in the summer of 2023. This was the first leg up, but technically started, summer of 2023. And we have another 2 years of this madness of bullish price action. So when I tell people to buy stocks as long-term investments, stocks is the only thing that is insulated from day trading, that you don't have to worry about much. You just hold on to it, And if you look at legendary day trader Peter Lynch's outlook on the market, these guys look at our friends here, look at the market long term. They have a 2-year, 3-year, 5-year expectations. There are 5-year cycles. Larry Williams is looking at the picture of a 5-year cycle for NASDAQ, and his statement is true that the indexes are on a trajectory path with destiny. I don't say these comments, but I was very bearish. A lot of people hated me in 2021, 2022. I was negative indexes, and then I became positive because I realized the whole cycle thing. This is actually taught at university in economics, but I learned about it, but I never understood it because I wasn't doing trading, right? So I didn't care. But this is all about what central banks do. An example of this is if I show you guys what happened with the USD JPY, the fall of USD JPY, and let me just remove everything. The fall of USD JPY. Let's look at the monthly chart, because the monthly chart, USD JPY in, let's just say 2016, has been, this is more of a 10-year cycle for USD JPY, because their central bank, I think, did not raise rates for 7 years or something like that. This is an example of a fucked up central bank. So therefore, a currency like USD JPY would fall under the long-term 10-year cycle, basically. I think only Warren Buffett's Berkshire Hathaway got into this trade, holding this trade for like 3 years or 2 years or something like that. I think they got in at 2020 or something like that. But anyway, that's an example. But if we break it down into the weekly chart and explain to you guys why central banks have a major impact in the market, is the one rate hike. Listen to this, yeah? The Central Bank of Japan raised rates. Remember, on the day that they raised rates, the market rallied. It wasn't a big thing, but they raised rates from negative 0.15. They raised it by 15 points to 0. Their bonds, where's the GJBs? Where are they? They're here. These ones here we're not paying much, but this is the yield curve control that they do. So they manipulate their bonds to pay people some money, 0.3, 0.8%, whatever that is, But the point being is 1% is the highest that they're willing to pay for in terms of interest, the Central Bank of Japan. The only largest holder after them was Berkshire Hathaway. They had to make a deal with them. And the point is that when the Central Bank of Japan raised rates, they flipped the whole picture. If the Central Bank of sorry, one second. Stay on the line. I just need to take a call. 1 second. Hello. Anyway, I was saying that forget what you see in the chart. You need to understand is if you are in line with the cycle and you're correct where the market is going and you have the right idea. Let me just pause this video so that I can. Anyway, stage part 2. If you are in the correct, if you know what cycle you are on and you trade, every day that you see a shift in market structure to the upside, you will have the easiest trades. Literally easiest trades, because you would be expected that real traders, real money comes into the market. If you guys, I told you guys to follow Mr. Brown on the Pepperstone analyst, and him and the other guy, the oil trader, how they conversate with each other and how they speak about the market. What made me laugh was that they said, if I ask you guys, on what day did the market shift for NASDAQ on the daily chart? Let's just pause. Let me hide everything. This chart looks like a mess because of the new week opening gaps, but as you can expect, if I show you something, this was 11th of September, and this was the day that this was the shift in market structure on the daily chart, because this candle took out that swing high. But the market, we expect the market to come back for this little, somewhere around here. Where's the 4 hour? I had it posted here on the daily chart. This is NQ, right? So yeah, sorry. We expect the market to come back for a volume imbalance here, or this one here, this, or like a fair value gap to come back. The shift in market structure already happened here. This candle caused the shift in market structure. We expect, because it's FOMC on the day, some crazy move all the way back to 19,000 on the dot. Two possible levels, 18,947 and 19,998. So anyway, as I was saying, they said that real buying in this market here, only these guys are friends. I'll tell you exactly what's happening in NASDAQ and who's stepping aside and who's taking the lead on this coming day. I'll tell you what happens. On NASDAQ, sorry, before I explain the cut reports, I'll explain to you guys on the day itself. The move lower, this candle to become negative, was 400 points from 18,539 all the way to this is a 700 point reversal. Basically, the market dropped 400 points, reversed 700 points up. A move that big is only in the influence of real buyers in the market. I'm not talking about algorithms who are, or liquidity providers who keep the exchange going. I'm talking about at the moment, at the very moment. Why did they do that as well? On the 11th of September, we also had the CPI report. It never occurred to anyone that CPI hit 2.5%. The level 2.5% for all central banks is the level that they have to, that's their green light to do whatever they're going to do. Do you understand? But the Central Bank of Canada started cutting rates at 2.8%. That was premature of them, but he was getting a lot of political headaches, so it was more of a politics decision than a economics decision, if that makes sense. So cutting too early, sorry. So if we have a situation where the real buyers in the cut report, because there was 11,000 contracts long according to the cut report, and I said, when are these guys when is this trade gonna actually appear from them? And I said, when 2.5 came out, I said, here we go, they're gonna go for it. And it was late in the afternoon they made that move. But I'll show you guys, where are we? S&P 500, NASDAQ. I'll just show you NASDAQ in general, NASDAQ mini, and I'll show you guys, this is the NASDAQ mini contract. and what is happening in the market now. Uh, the commercials are 3,988 long. Our friends, the non-commercials are short covering, yet they are still long themselves. Retail is taking profit on both longs and both shorts. The commercials were the ones who were selling Nasdaq for the last few weeks. They took a lot of their profits. That's why they were on a hedging program, hedging short. But the situation is that open interest is high. Therefore, no, sorry, open interest was low on the long side, and now the open interest has to change because you have number of traders in each category, 163 traders in the long side, if that makes sense. And this is the Nasdaq E-mini. This one also, oh sorry, that's the Nasdaq. Which one is this one? This is Nasdaq Mini futures only. So this is the E-mini one. Sorry, this is the one I was looking at. Our friends, sorry, the commercials are stepping aside on Nasdaq and Wall Street. The good thing, one thing about that people don't know about the cut reports, I'm gonna tell you now that I always kept it to myself, but I'll tell you now. This is not to be confirmation bias or anything. Yeah, whenever there is a major event in the market, I'm talking about an NFP report or central bank, especially with central banks. These guys, they don't get involved in central bank events because they deal with a lot of people's money. They have the patience, and because we're dealing with hedge funds, pension funds, teachers funds, a lot, governments, countries, sovereign, like the Norway. You guys know that the Norway central bank is in S&P 500, not Nasdaq, but they have S&P 500 ETFs basically. And the Saudi and Norwegian sovereign wealth funds, they like to get they're in the commercial positions, if that makes sense. So they don't get involved, so they step aside. But our favorite people, Wall Street, they're going long 8,000. This is the largest position in the last 3 weeks on Nasdaq, 8,814, and now they are predominantly bullish Nasdaq. Additionally, open interest, they were able to swing on a majority, 63.6%, and our friends at retail, large retail, is stepping aside, and only some of them are short. But I would assume that these are swing traders, so they have to remove their. We don't know how short they were. Additionally, if I show you guys something, if let's just look at the daily chart, and I'll just do it on NQ1 and from the ICT 2024 mentorship. If I explain it to you guys like this, this is the daily chart. Yeah, think of swing highs and swing lows and all that stuff. ICTs, you need to ask yourself just by looking at the daily chart, who is winning like right now since the beginning of since July, that high that we made in July. Who is the people that are winning or leading the market? If I was to measure using one thing ICT did not reveal to the public that I figured out and some people figured out is what is the value between that high and this high in terms of volume, not in terms of contract, just volume. If you when you look at the tape, there's a volume count in terms of like 10 contracts times 300, if that makes sense. Okay, just do the maths. There's no definitive number, but we don't know the exact number. Only CME Group would know the number. We know that they took out this low, and I'll tell you guys this trick now. I'll teach you guys this now. There is a setting here that I use. Where is this thing that I always use? Is it here? Where I can't find it. This one here. Nope. Nope, it's not this one. Okay, it's this one. Oh, what the fuck is that? I use this one here. I think this one is called. Okay, it's here. This is called date and price range. Okay, let me just do it like this for you guys. Before this move happened, why should the market go here first instead of there first? Now that it went there, why would they not? Some people think, oh, they're gonna go here, but let's just do some simple maths or something that ICT. Most people will try to rob you for this information, but I'll tell you now. if I calculate this low before this move happened, I'm just going to do some simple calculation. I will calculate in terms of time, date, and volume. The distance between here to there, right there. Just so I'll put 2 arrows for you guys there. So let me just put it there for you guys. Right there. And right here. This took 60 days, 40 bars or 40 candles. And it's the volume from that low to this low here is 27 in volume, 27.326 million, 60 days. Okay, they took it, bam, one big. This is a lot of money in terms for their eyes. Now, once they did that, calculate this high, this one here, to that high. So let's do the maths. Once they've taken that liquidity, where is the next amount of money for them? 21 million. 0.272 with open interest. I think it's like $200 million. So whoever is short NASDAQ, holding the trade short NASDAQ, is right there. What you guys don't know that I learned from the tape is this year, because this is the CME group and their traders, anyone who's holding this trade, now people are going to think I'm crazy when I say this year, but someone can hold a trade at 20,579, get preferential treatment with the exchange, and is allowed to add. Listen to me, right? If you guys watch the tape, I don't make this up. I'm not lying to you. They're allowed to add above us. Literally, they can just to keep price lower. I know that sounds crazy, but I've seen it in front of my own eyes, and I'm telling you guys that whoever. I'll give you an example. This person, this one candle here, while the market is trying to go up, this person is allowed to add from back there. So they're allowed to add to their positions. And if you guys watch the industry, these guys have preferential rates or orders. If you see the tape itself, like for example, I showed you guys the other day when we were doing the live trading on futures, I said, what was the level? 19,530. I said, these are adding from above us. It's like what they're doing is basically adding contracts to short like that. Basically, like they're making the market push lower like this. Does that make sense? So this is what you see on the tape: going up, going down, going up, going down. But how can the people be above us push us lower? Does that make sense? Do you get it? So basically, if you just logically think about it, now that this volume has been taken, there is only from significant highs and significant lows. This high to that high, 42 days. This was even, they like to go for, if ICT didn't clarify, he's not going to clarify which equal highs and equal lows they go for. But I put it to you, what he actually means is that the shorter the time frame, the reasonable amount of liquidity, that is their next target, if that makes sense. And whoever keeps pushing the market lower, holding the market lower, a lot of people are about to lose on FOMC day. Certainly this high here, logically, before they take out 20,982, they will take out the first intended target, which is here. 20,028 is the final target for NASDAQ on the day of FOMC, provided that we get 50 basis points. But there is no incentive for them to go from this low or this low to that low, because the value is 32 days in terms of time taken to happen, and the volume is 13,837 times current open interest on the sell side. If you do the calculation on the sell side, you have to get the bar chart to calculate it. But do you guys get this thing? What I'm trying to say here? Sorry. If this has been taken, now the market looks like this. Which is more appealing to them? The July high to the August 23 high. Bear in mind all of these 1, 2, 3, all these highs on the way. Where is the market likely to go to next? Now I've demonstrated it to people when we were trading. Why I dismiss some people's comments when they say in the live chat, oh, we got no. I don't think we got lower because there's nothing for them to go lower, if that makes sense, right? So if I just show you guys long term sell side, and I do this. Buy side. The long-term sell side has been taken, which is May the 24th. That was the end purpose of this contract, was to make the high. The September contract was to make a high in July and take the low of May. Previous contracts low, one of the previous key levels of contract. The next contract, the December contract, is to make new all-time highs all the way up because of what? Market cycles. Does that make sense, guys? If you guys get the picture of what I drew with USD JPY about long-term cycles and things like that, how the market views things. And sorry, I'll give you what I was looking at NQ1, how the market is viewed this way. If I just make these blue for you guys so you guys get a more better visual representation, and I just draw it to you like this. Remember what I said, that bullish cycles or financial easing cycles take 3 years, while they can only hold rates 18 months, restrictive a year and a half, and then they start to change and things like that. But and you can ask questions, but I hope you found that technique really helpful, and you can do this technique on the where's the NQ1. You can do this technique on the rule is very simple. I'm going to tell you guys right now. They will go for which one has the most liquidity. If it's a longer term target and we are technically closer to it, they will take it. But if they have already taken what I'm trying to make you understand, if they've already taken a larger cycle, like the larger liquidity was 28 million, 61 days, whatever, they've taken it here. This has become the long-term low with a short-term low to the left of it, another intermediate term low, and another low to the right of it. The market next target is right here, and we need a big move to get to that level. 500 points will be FOMC logically, if that makes sense. So as this one is discounted, this one is discounted, and you should be trading the market solely focusing on from here to there. There's only 2 days left of this current contract, and at start of the new contract, and then we'll start the easing cycle. And this market, the purpose of the 2024 December contract NQZ, I think it's live already, right? Let me look at it. NQZ, I think 2024 is already started trading. Yeah, oh, it looks really nice. So look at the difference, how crazy this one is. So let me see what we are looking at here. Oh, it looks like, yeah, it looks like that. 60K, 55K. So the next target is higher. So on NQZ is 20,227 is the next target. This one is already, the futures contract is already at 19,074. It's already, so there's been front run by 200 points, no problem. Anyway, any questions, guys? I hope that makes sense. And for that reason, we make the case in this group that the Central Bank of America, the Fed, will raise rates because of a sense of urgency to avoid a recession. 25 basis points, it's not enough, to be honest with you. First question is Rob. Go ahead. I'll pause the recording here.